Welcome to Pro News. Let's dive into the latest financial updates. The dollar gained daily last week, taking it from 13-month lows to 6-week highs. The move into defensive assets has been driven by the escalating conflict in the Middle East and the Fed's management of expectations. In a speech earlier this month, Powell made it clear that the committee preferred to stick to the standard 25-point rate cut for the foreseeable future. From the technical analysis perspective, the dollar index bounced back above its 200-week moving average and the key 100 level. Meanwhile, the pound and euro faced their own challenges. The pound, after peaking above 1.3430, fell back below 1.31 at one point on comments from the Bank of England governor about a willingness to ease policy more actively. The single currency lost ground as inflation in the region fell to target, and comments from ECB officials that more drastic easing to support the economy was not ruled out. The Japanese yen was the week's biggest loser, falling nearly 3% following Shigeru Ishiba's unexpected appointment as the new head of government. Ishiba's remarks suggested that further rate hikes were unlikely. WTI crude oil rose by the most in a year and a half last week, as fears swirled that Israel was preparing a strike on Iran's oil infrastructure. Also playing a role is the drop in U.S. commercial inventories to a 6-year low, although the latest data shows an increase of 3.9 million. The Strategic Petroleum Reserve has been methodically replenished for more than a year now, but at a much slower pace than in the early 1980s and 2000s, and nowhere near the 2021-2023 sell-off. Oil was also helped by the hawkish tone of Saudi Arabia's comments on the sidelines of OPEC, where the kingdom threatened a sharp drop in oil prices if cartel members failed to meet quotas. This should be seen as another intervention by the cartel on dips below $70 a barrel Brent, which has turned the market around half a dozen times in the past 2 years. It was an amazingly uneventful week for gold. Trading in the $26, $25, $26, $70 range, it didn't rewrite the previous week's highs or lows. But this cruising near historic highs raises the question of what the move beyond the recent consolidation will be. As is often the case, the longer the consolidation, the stronger the subsequent move. Silver hovering near $32 per troy ounce and near 2012 highs shows that the bullish momentum in the precious metals market is still strong, and localized profit-taking after the rally has not changed sentiment. Bitcoin lost ground early in the week, but stabilized in the second half of the week. This was a pullback from the 66K area. The upper boundary of the descending corridor formed in March. The sell-off paused near the 50-day moving average, and it approached the 60K level. Bitcoin's penetration of traditional finance reinforces its link to fluctuations in risk appetite and the global macroeconomy. Geopolitical unpredictability remains a significant risk, especially for commodities. The escalating conflict in the Middle East has been a major driver for oil prices recently and will likely continue to influence the market in the coming weeks. Additionally, China's economic stimulus is a medium-term bullish factor for commodities, sparking speculation about increased demand for metals and energy. For currency and equity markets in the US and Europe, monetary policy is the main focus. Key events to watch include the Fed meeting minutes on Wednesday and the US consumer inflation report on Thursday. A sharp slowdown in inflation could revive discussions of a 50-point rate cut in November. The probability of such a cut has dropped from 53% to 30% over the past week, which has supported the dollar's rebound against major currencies. A further shift towards a measured reduction in rates could weigh on equities and strengthen the US dollar. Stay tuned to Pro News for the latest updates on global markets. Don't forget to like, share, and subscribe.